In my experience, and I don't know why it is, gold is the first mover. But when the precious metals narrative becomes established by gold and the generalist money begins to come into the precious metal space, because the population of silver stocks is so small, and because the price movements that are exhibited by the commodities that they produce is so great, if we head into a precious metals bull market in 2024, note that I said if, not when, what will happen is that precious metals bull market will absolutely, positively be led by gold. I don't know why this is. I just know that it always is. And when the generalist money is attracted by the precious metals narrative, silver, perhaps because of its lower unit of exchange, unit value, will move further and will move faster.
In anticipation of a potential bull market for precious metals in 2024, RickRule of Rule Investment Media underscores the likelihood of gold playing a leading role again, while silver, driven by its lower unit value, is expected to exhibit more pronounced and rapid price movements. The gold market is poised to conclude 2023 with impressive gains exceeding 13.50%. Heightened expectations of the Federal Reserve initiating interest rate reductions from March 2024 contribute to the optimistic outlook for gold in the coming year. On the other hand, despite factors such as anticipated U.S. interest rate cuts and global tensions, silver prices are projected to end in 2023 without significant changes from their starting point. Silver has not seen a breakout despite the volatility experienced throughout the year. RickRule emphasizes the significance of understanding that only approximately 20% of global silver production comes from new mine supply, with the majority originating from byproduct production, base metals, and a thriving scrap and recycling market. Projections indicate that global mine production of silver is set to surpass 1 billion ounces by 2023, up from around 918 million ounces in 2021. This increase is primarily attributed to significant projects slated to commence operations in Mexico, Chile, and Ecuador. Despite the optimistic projections for silver production, RickRule highlights persistent supply deficits in the silver market over the years. Frustration among silver speculators, eagerly anticipating a substantial price surge, adds to the prevailing uncertainty. With the global silver supply expected to exceed 1 billion ounces, a projected deficit of 141 million ounces looms for 2023, marking the third consecutive year of deficits. Even with new projects in the pipeline, the Silver Institute does not anticipate relief from these deficits anytime soon. Let's delve into key moments from RickRule's interview with these video clips.
A substantial above-ground inventory, silver. It's important to know that. Nobody knows the size of it. There are various guesses. But simply the fact that physical silver has been used as a store of value, a non-governmental store of value, particularly in South Asia and the Middle East for a long time. And because that silver has been used outside of government systems, it's very difficult to understand, as an example, how much silver inventory exists in private hands in South Asia, and in the Middle East and North Africa. It's important to note, too, that too many people who believe in an imminent silver squeeze look in terms of supply at silver mine supply. It's very worthy to note that at best, new mine supply from silver mine accounts for 20% of global silver production. The rest coming from byproduct production and base metals, and from a very robust scrap and recycling market. One of the interesting things about solar has been thus far that silver is so cheap that a recycling market hasn't developed in the most part with regards to silver that has been used on solar panels. It's simply at $25 isn't economic in most applications to recover the silver from scrapped solar panels. It's important to note, too, that silver at this price is so cheap that the industry has very little incentive to develop a substitute for silver in various applications that require reflectivity and frankly, the ductile properties, the fact that you can spread silver so thinly and get a uniform reflective surface. The point of all this simply is that when you go through year after year after year of supply deficit, at the same time that silver speculators are getting more and more and more disappointed, that pop in silver that attracted them is getting closer to occurring. People want certainty. Unfortunately, with regards to silver, certainty is in short supply. Nobody really understands what the above ground inventory is because so much of it is privately and closely held. Nobody understands very much about the price points that will be necessary to encourage substitution should the silver price go up. The silver speculator, because, as an example, during the Reddit silver squeeze, had such high and immediate expectations, looks at this uncertainty, and they look at the lack of price movement, and they suggest to themselves that silver is dead. That's wrong. What is right is that their time expectations, their time preferences are not a fundamental. They're a personal preference. I guess it's easy at age 70, having been rewarded once every 10 or 15 years for 50 years by extravagant, exorbitant, luxurious moves in the price of silver and silver securities, that I can be very, very, very sanguine. I think it's important to note, too, I love assets that are hated. My suspicion is that if the silver price fell from $25 to, say, $15, if there was a cataclysmic decline in silver, that I would probably end up having 5, 6, or 7% of my net worth in silver. My target allocation at present is 2.5%. That says a whole bunch of things. The first thing it says is that to the extent I'm wrong, it doesn't change my decision as to what to have for breakfast. But it's such a wonderfully disconnected bet. If I'm right, 2.5% of my portfolio becomes 25% of my portfolio. That's the kind of move that you see particularly in the silver equities when they finally come around to moving. When people ask me when that's going to occur, I'm forced to say neither I nor any other supposed expert has any idea whatsoever.
A silver speculator, RickRule draws inspiration from the extraordinary price movements in silver and silver equities witnessed during the 1970 AS. Reflecting on historical data, Rule recalls that the average price of silver was $1.55 in 1971, subsequently rising to $4.71 in 1974. Over the next 4 years, silver maintained a range between $4.35 and $5.40. In the early 1990s, Rule vividly remembers another period of noteworthy price fluctuations. 1999, silver's price performance was relatively subdued, experiencing a 5.8% decline from the previous year. However, it concluded the year up 6.7% from its starting level, reaching $5.33 from an initial $4.99. Throughout the year, silver traded within a narrow range of $4.88 to $5.79. The gold-to-silver ratio for 1999 was 53.37, slightly higher than the 1998 ratio of 53.08. The average ratio for the period spanning 1968 to 1999 was 50.18. Rule emphasizes that these historical experiences underscore the extravagant nature of silver's price movements. In current market dynamics, the price of silver has recently declined to around $23.73. This downward movement is attributed to the US dollar index recovering further despite thin trading volume during the festive season. Investors interpret the recent sell-off in the US dollar index, driven by deepening expectations of early rate cuts by the Federal Reserve, as possibly euphoric. The white metal's 2-week low reflects the impact of these market dynamics. Let's get back to the interview.
Silver as an insurance asset. I own gold. I own gold because I'm afraid it's going to do well. I own gold to preserve my wealth. I own silver as a speculator. I remember the extraordinary move in silver and silver equities in the 1970s. I remember a move in the metal from $1.50 to $50. I remember a move in Coeur d'Alene mines, which sadly I didn't participate in, from $0.10 to $65. Now, granted, that move in the 1970s was the most dramatic in anybody's living memory. Mm-hmm. But the moves that we enjoyed in the early part of the decade of the 90s, not halcyon time for precious metals was certainly one for the record books, too. I remember the price of silver going from $4, if my memory serves me correct, back to almost $50 again, but much more dramatically. And I did participate in a major way. Silver Standard going from 72 cents to $45. Pan American Silver going from 50 cents to plus $40. These are truly extravagant moves. And people who have the financial wherewithal to risk a decline, risk being wrong, that have the psychological wherewithal to handle the sort of dormant periods where silver doesn't make you anything but costs you a lot. Those people, and I've known, well, I am one, and I've known several, stand to enjoy absolutely life-changing experiences by utilizing a fairly small proportion of their overall portfolio or liquidity. I mean, think about the idea that a fairly young person has with, say, $100,000 portfolio, and that person allocates only $5,000 to silver. And then they experience the sort of moves that silver has exhibited at least 3 times in my career. That $5,000 becomes $50,000, at least pre-tax. Which is to say somebody experiences a marked change in their portfolio for a fairly small financial allocation. That's why I own silver. I don't, frankly, this is going to sound very arrogant, I frankly don't need the money, but I enjoy the process. The vast majority of my estate is going to go to philanthropy. And I intend to leave a lot. Silver will help me.
With the potential for a bull market in precious metals in 2024, how do you see the role of gold evolving and its impact on the broader market? In contrast, despite expected U.S. interest rate cuts and global tensions, silver prices are projected to end in 2023 without significant changes from their starting point. How do you interpret this resilience or lack of breakout in the silver market amid such dynamics? Share your thoughts in the comments section. If you liked the video, please subscribe to our channel and remember to activate notifications by hitting the bell icon. Your participation means a lot to us. Thank you.